The Bitcoin hash rate continues to climb at an exponential rate to new all-time highs seemingly every single week. But even though many people seem to think that the hash rate increasing is a very bullish sign for Bitcoin, obviously it makes the network more secure, is this actually becoming a bit of a problem for the Bitcoin network? Today we're going to be looking at the potential Bitcoin hash rate problem, and where better to start than the actual Bitcoin hash rate chart we have here on lookintobitcoin.com, which is measuring the computational power securing the Bitcoin network and competing to mine the newest blocks for Bitcoin block rewards and fees. That currently sits at around 450 tera hashes per second, which is obviously a lot of computational power. But as we can see, this trend has been pretty exponentially to the upside for a very long period of time now. We can see that over Bitcoin's entire history, this has generally trended to the upside. There is some parallel correlation with price. Once we see Bitcoin's price action really capitulate at the tail end of bear cycles, we do usually see a bit of a drop off in this hash rate. But we can see recently here, from the most recent lows we set at just above $15,000 to $16,000, even though price has increased noticeably, it's not been a stark increase in price action. Yet the Bitcoin hash rate has climbed just absolutely rapidly, absolutely exponentially. Now, like I said, a lot of people are saying that this is a very good thing for Bitcoin. Obviously, the network becomes more and more secure. But at what point does this maybe become a little bit of a problem? At what point are the barriers to entry too high for new miners and we potentially get a bit more of a centralization in the distribution of mining power? At what point does this climb so rapidly and the competition for mining blocks increases so exponentially that the difficulty rises so much and the cost to mine Bitcoins increases so rapidly, and without a huge price increase, especially with a halving event that's going to reduce that block reward by 50%, are we going to see a huge decrease in the Bitcoin hash rate as miners suddenly start becoming unprofitable? Well, all of this are very valid talking points. What we can do is actually look at previous halving dates to see how that actually impacted the Bitcoin hash rate. So if we just zoom in on the 2020 halving example, because halvings prior to that, the hash rate just wasn't really large enough so that we can really observe a noticeable trend increase or decrease. But if we just go to the 2020 halving, which was May 11th, 2020, I believe. So if we just show over this period of time here, we can see that May 11th, the Bitcoin hash rate, we could see here that it increased to about 121 million terahashes and then decreased to about 90 million. So a pretty stark, over 20% decrease in the hash rate, presumably due to the halving event and miners having their earnings potentially cut in half if we didn't see a big price increase. Obviously, a big price increase followed, but if we were to see a halving event in the next few months, which we will in April 2024 approximately, and the Bitcoin price hasn't increased too much, will we see a big decrease in the Bitcoin hash rate? Well, probably. If we see the block reward reduce from 6.25 BTC to 3.125 BTC, it only makes sense that people that are potentially mining Bitcoin on very slim profit margins just won't be profitable anymore. We can see here that in each one of these miner revenue periods after and prior to the Bitcoin halving events, this block reward drops by 50%. But ultimately, like we can see, is this going to impact Bitcoin negatively on a long-term basis? Almost certainly not. We can see that after these halving events, Bitcoin maybe has a little bit of a pullback, maybe just due to a lot of miners capitulating, but ultimately these actually tend to spur on huge price increases for Bitcoin, which ultimately negates the decreasing block reward amount in BTC because the dollar amount has increased so exponentially. So really, we probably are going to see a bit of a pullback in the hash rate, but really over the long term, this is only going to drive more interest into the Bitcoin markets as the asset becomes more scarce, as the flow of new incoming Bitcoin continues to decrease. What we can also do is look at the miner difficulty, because just looking at the hash rate alone only really tells the picture of hash rate on that day or that week, for example. If we look at the difficulty, this is implemented into the Bitcoin code to automatically adjust how hard it is for new Bitcoin blocks to be mined about every 2 weeks, so that blocks are maintained and mined at about 10-minute intervals. And we can see here it's pretty much a very similar graph to the Bitcoin hash rate, but we can see that this is increased so exponentially, so massively, that many people are thinking that maybe it's too difficult to get into Bitcoin mining, that maybe we're going to see a centralization of Bitcoin miners going forward because the barriers to entry are simply too high. And whilst we look at this graph, it does seem like this miner difficulty has increased so exponentially that it's hard to even fathom how much this has increased. Really, if we actually look at the rate of change on a logarithmic scale, it actually tells a little bit of a different story. So I did what any sane person would do and downloaded the entire history of all Bitcoin mining difficulty changes and actually mapped them out so we can see the actual percentage rate of change difference as the Bitcoin network has grown. So here, for example, is every single miner difficulty change on the Bitcoin network scattered out into this chart so we can see that the actual trend of Bitcoin mining difficulty increases or decreases actually to the downside, meaning that even though the hash rate is increasing fairly exponentially, the rate of change of the difficulty increases is actually decreasing. And this chart's a little bit all over the place simply because Bitcoin in the early days was so volatile and miners were just coming and going a lot more cyclically and frequently. There wasn't big industrial mining warehouses that kind of negated the volatility of hash rate. So if we just isolate this graph from 2015 onwards, the chart gets a little cleaner. But we can see it's pretty much the exact same trend. The trend of Bitcoin difficulty mining increases or decreases is very much to the downside. Even from 2015 onwards, we can see even if we take into account the most recent mining difficulty change here, which was about 6.5%, ultimately the trend is to the downside. Even the hash rate is increasing, really in relation to the previous increases we've seen, it's nothing out of the ordinary. Bitcoin's hash rate is actually increasing at a pretty predictably decreasing rate. Now, of course, just because the mining difficulty increases aren't increasing as rapidly, it doesn't necessarily mean that the cost or barriers to entry is reasonable necessarily. It may just be increasing in relation to the amount of new massive industrial miners. And this is where many people look to news articles such as this one, where BlackRock potentially investing in a huge amount of Bitcoin miners, many people potentially speculating that they're trying to corner the Bitcoin mining network. We can see here that of the 5 biggest Bitcoin mining stocks, they've actually bought up, I think it's $400 million worth. Yeah, $411.5 million worth of these mining stocks, 4 of the largest 5. But really what we can do is look at this because many people may see that maybe BlackRock's going to start controlling the Bitcoin mining. Then we can actually just look at the distribution of this hash rate to see how much of the mining power that BlackRock inadvertently has some influence over. So if we just go to blockchain.com here, we can see this is the distribution of the mining hash rate of the past year. And we can see that these hashing pools, these mining pools that Bitcoin miners will collate their Bitcoin power into and then share the block rewards from any mined blocks. We can see that it's actually a fairly distributed amount of mining power amongst the biggest mining pools. And ultimately, there's a bit of game theory involved here. If Foundry USA, for example, the current largest mining hash pool, increased so exponentially, maybe it's of the miners' best interest to potentially put some of their hashing power into some competing pools just to prevent any 51% attacks on the network or anything like that. But really, if we actually look at the amount of hashing power that those 5 biggest mining stocks had and how much they actually contribute to the total hash rate, they actually account for only about 5% of the total hash rate power. And if we actually look at the amount that BlackRock invested compared to the actual stocks of these companies, the actual market cap of these companies, which is over 5 billion, BlackRock inadvertently control less than 0.5% of Bitcoin mining, which is a tiny amount. It's not going to make any difference long term to the Bitcoin mining network or anything like that. And for the argument of potentially pricing out new miners on the network, we can just look to Bitmain, which is the largest provider and distributor and manufacturer of Bitcoin mining tools. And this Bitcoin miner S19, which is of course not cheap, it's just under $3,000. But we can see here that it's reasonably priced. It's not certainly going to price out any large incoming enterprise. And if we just actually plug those values in of how much hashing power you'd contribute and the expected profits you'd get from that around $3,000 investment, you could be earning about $11 a day. This is of course assuming you're running on renewable energy, which Bitcoin is actually promoting, just because once you've implemented the infrastructure for cheap renewable energy efficient mining, then actually that's where the big profit margins are made. But just from this $3,000 Bitcoin miner entry, which again isn't the smallest barrier to entry, but you break even after about 290 days. And if you were to invest 1 Bitcoin to buy multiple of those same machines in the first year of operations alone, you'd make about $9,000 to $10,000 profit. So ultimately, I think this argument doesn't really have too much influence either. Also, if you haven't already, please don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, while the Bitcoin hash rate recently increasing at seemingly exponential rates have led to many people potentially being a little concerned with the health of Bitcoin mining, ultimately we could see that really this isn't really anything to be concerned about. And while the increase is likely in part due to the upcoming halving, which will likely result in a bit of a pullback post-halving, we can see that things are actually looking very normal and healthy. The percentage increase of Bitcoin mining difficulties is actually decreasing over the long term, which means that potentially it's not increasing as exponentially. That maybe means that the barriers to entry aren't as high as previously thought, especially if we look at the infrastructure that's now available and the investments that you could come in and the returns that you could potentially get from securing the Bitcoin network. Obviously, I'm not recommended this. There's risk involved, just like investing or trading anything when it comes to cryptocurrency mining. But ultimately, I think a lot of the claims that the fundamentals behind Bitcoin mining are becoming a little bit bearish, that there's something to be concerned about, there's absolutely no cause for concern. I think ultimately Bitcoin mining has never actually been in a healthier state. If you like this video, then please visit lookintobitcoin.com. We can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, what are your thoughts on the current state of Bitcoin mining? Do you do any mining yourself? Do you think that over the long term, Bitcoin mining is going to continue to grow exponentially? Are you bullish on Bitcoin mining, or do you prefer potentially proof of stake systems? Whatever your thoughts are, as I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.